University of San Francisco, Business 305, Principles of Finance, Goldman Sachs. Take three, team two, and action.
Hi everyone, today we will talk stock valuation of Goldman Sachs. I'm Yuhan.
I'm Lisette. And my name is Ryan.
Our recommendation is to sell. Instruct value is 119.1, smaller than 205. Current stock price. Discount is 7.2%. The speech is divided into four parts: background, financial conditions, stock valuation, and recommendation. Goldman Sachs is a public company. It was founded in 1869, and the founder is Marcus Goldman. The main instructor are global investment banking, securities, and investment management. The company provides worldwide service, and the headquarters in New York. In 2016, total assets is 916.8 billion. The banking ranking Goldman is number 5. Total assets was $0.9 trillion. The company value is clients first. The company's goal is to provide higher return to shareholders. Goldman Sachs offers its staff more opportunity to development, in integrity, and diversity are the core of its services.
So some of the services they provide are investment banking, mutual funds, investment management, institutional client services, mergers and acquisitions, and investment lending. These are going to be some of the executives from Goldman Sachs. The main two are going to be Lloyd, which is the chairman, and David M. Solomon, which is the chief executive officer. This is our SWOT analysis for Goldman Sachs. Some of their greatest strengths are the strong brand name and good financial position. They're geographically present across various countries. They have good returns on capital, but some of their weaknesses is that they have a lot of legal issues. They always get fined for stuff, and they're always fluctuating markets that create variable revenues. Some of the opportunities are expansion in emerging economies like Brazil or Morocco, diversifying portfolios for customers, and growth in investment banking. Some of the threats that we found were variable interest rates, declining stock markets, and financial crises in the future, such as recessions. This is going to be our financial conditions for Goldman Sachs. The return on assets was below average, the return on equity was below average, and the profit margin was also below average. But on a positive note, the leverage ratios, debt and equity, was excellent. So overall, they are below average. With the profitability ratios, they're below average, good, and with the growth 3 years average model, they scored below average, average, and excellent. So overall, they were above average.
So for the perpetuity model, we got an intrinsic value of $163.60, and it had a discount rate of 20.2% because the valued stock price is at $205. For this model, we decided that it should sell just because it had such a high discount. And then also for the Gordon growth model, it was also at a discount of 8.7%. So the intrinsic value was $187.18. Here we also gave the recommendation of selling. And for the multiple approach, we got an intrinsic value of $183.40. And this discount was at 10.5%. And again, as the other model showed, our recommendation was to sell. In the discounted cash flow, we got an intrinsic value of $200.50. was 2.2%. We decided to sell, and also we chose the medium range because we figured that it would describe the stock over time more accurately. For the weighted stock valuation, we got $191.10, and this is also the stock price that we chose to, head our financial analysis of, or our investment analysis of Goldman Sachs. The discount was at 7.2%, and we also said to sell for the weighted valuation. So our overall recommendation is to sell. We have 12 trades: write forwards, write futures, write calls for futures, buy puts on futures. For the ETFs, sell stocks, sell short, write calls, buy puts, and the same exact thing for the stocks. And for our references, we use Goldman Sachs website, we use stock charts, and then we also use Mergent. If anyone has any questions, feel free to ask. Thank you for listening to our presentation.